Alright, settle in folks. I know. AI is going to eat the world. Your cousin's friend's dog walker is a Bitcoin millionaire. Tesla's robotaxis are just around the corner, and you totally get what Palantir does. But hang on a second. Before you mortgage your house to buy a fraction of a share in these giants, let me offer you a slightly different perspective. What have you got to lose? Just a few minutes of your time. My hot take, if you are an individual investor, and let's be real, you probably are, chasing these headline-grabbing behemoths is a bit like showing up to a gold rush after all the big veins have been tapped. Sure, Nvidia, Tesla and Palantir have had incredible runs. It is precisely why you should be cautious now. You likely missed the rocket ship when Nvidia was a mere few hundred billion before ChatGPT was a household name. Thinking Tesla, a car company, and yes, still a car company, is going to repeat its meteoric rise, or that you truly understand Palantir's secret sauce? Let's be honest. And the valuations? Nvidia is sitting at a cool $3.3 trillion. Tesla is over $1 trillion. Together with Bitcoin, you are looking at a significant slice of the entire US economy. Does that make sense for an individual investor with, say, a few million at best? Probably not. Now, I am not saying never buy big companies. There is a time and a place. I bought Meta in 2022 when everyone was screaming, sell. The key is those opportunities are rare and they usually show up when the crowd is running the other way. Doing what everyone else is doing, that is a recipe for meh returns at the best case. Remember the early 2010s? Big tech was practically on clearance. And let's be honest, small caps usually outperform the large cap companies. So if you want to outperform the market, be a contrarian. Alright, let's start with Nvidia. So, if you didn't get in before every news anchor learned to say generative AI, well, you are fashionably late to a party that is already got a 3.3 trillion market cap. That is a trillion, with a T, folks. To put that in perspective, that is more than the annual economic output of, well, lots of countries. Now, the bulls will tell you it is all justified. They are powering the AI revolution. And they are. But let's look at the price tag. You are paying about 50 times its forward earnings. And the price to sales ratio is around 25. That means for every dollar of Nvidia's sales, investors are happily handing over $25. And also, who is buying all these chips? Turns out about 40% of Nvidia's sales go to just 4 companies: Alphabet, Amazon, Meta, and Microsoft. So if one of them decides to, say, design more of their own chips, or maybe just tighten their belt for a while, Nvidia might feel a rather significant pinch. It is like having all your eggs in 4 very large and somewhat unpredictable baskets. If you don't believe me, look at the insiders. They have been selling shares, hundreds of millions of dollars. Now, it is often part of their compensation, schedule rates, etc., etc. But it does make you wonder, if the future is so incredibly bright, why are these folks closest to the sun cashing in their sunglasses? Mr. Jensen is almost making a sale of $1 billion. And competition, it is heating up. AMD is nipping at their heels, Intel is trying to remember how to be cool again, and even those big cloud customers are thinking, hey, maybe we can make these fancy chips ourselves. The moat is wide, nobody is denying that. But it is not looking as piranha-infested as it once did. To expect another 10x from here, well, that just means you don't know math. Okay, let's go to Tesla. The company that convinced the world a car manufacturer could be valued like a hyper-growth SaaS company. And for a while, it worked. Elon tweets, the stock roars, and Wall Street bets, well, they like the stock 8 times. Fast forward to today, May 2025, it still got a market cap of around 1.1 trillion, but price to earnings ratio is almost 200. Yes, almost 200. For a company. Okay, let's see what they do. Oh, they sell cars? Or is it the dancing robots that's causing it? I don't know. Here's the kicker. Their automotive revenue actually dropped 20% in the first quarter of 2025. Their margins are getting squeezed. Well, it turns out selling cars is a tough competitive business, especially when every other manufacturer, from BYD to Volkswagen, is rolling out their own electric fleets. The EV landscape is getting crowded. It is not just Tesla's playground anymore. And those robotaxis, they were supposed to add, 30 trillion from the analysts? Well, we are still waiting on that, patiently. While other companies, actually deploying driverless taxis in cities. Hi, Google. The full self-driving is still more like full self-driving with an asterisk and please keep your hands on the wheel and also pay us more money for it. Well, great plan, Elon. And then there is Palantir, the company whose name sounds like a mystical orb from Lord of the Rings and whose business model is about as clear to the average person. They do, well, data stuff for governments and big companies with AI, probably. Their stock got a big dose of the AI hype serum. And it worked. We are talking about a market cap of $290 billion. And the valuation metrics, hold on to your head, the price to earnings ratio is over 500, a price to sales ratio of around 90. That means investors are paying $90 for every dollar of sale that Palantir makes. At this point, like Nvidia is just a value stock. Here's a fun fact. Palantir just recently achieved GAAP profitability, and it is razor thin. A big reason their adjusted profits look better is because they pay their employees a lot of money in stock. We are talking hundreds of millions of dollars in just one quarter alone. It is a great way to make your cash flow look good because you are not actually spending cash. You are just diluting your shareholders. And if you own Palantir shares, well, you are the one getting diluted. A huge chunk of their revenue, around 67%, comes from the US. And a lot of that is government contract. That is great when the government is spending up and you are the chosen one. But what happens if priorities shift or a new administration has different ideas? Or God forbid, peace breaks out. Relying on government contract is a bit like relying on a very powerful, very bureaucratic sugar daddy. And the competition, despite the mystic, they are not alone. Snowflake, Microsoft, Amazon, they are all in the data analytics and AI game. The unique platform might not be so unique after all. So with Palantir, you are betting on a company with a sky-high valuation, newly minted and slim profitability, propped up by stock compensation, heavy reliance on government contracts, and a competitive landscape that is getting more crowded. What could go wrong? Look, could these stocks double again? Well, maybe. Who am I to say? Is Palantir going to magically join the trillion-dollar club? Well, stranger things have happened in markets fueled by hype and cheap money, but that's not the point. The point is for you, the individual investor, chasing these already huge, headline-grabbing, analyst-swarmed behemoths is like trying to catch a whale with a fishing rod. It is probably not going to end well, and you will miss all the perfectly good, much easier to catch fish swimming right by your boat. As a smart investor, your playground is where the giants can't easily tread. You can find incredible opportunities in companies with market caps of around $1 billion or even smaller. These are the places where a little bit of homework can uncover a gem that Wall Street hasn't bothered to polish yet because they simply can't get in. Remember, Warren Buffett himself said that if he were managing a smaller sum, he could easily achieve 50% annual returns. Why? Because he could invest in these smaller, nimble companies that aren't on every hedge fund's radar. You, my friend, are running that smaller portfolio. You have the agility. You don't have to pour your hard-earned cash into most talked about, overanalyzed, and often overvalued companies on the planet. These giants rarely, if ever, trade at bargain prices once they are in the spotlight. Your advantage lies in finding the future Nvidias and Teslas before they are household names and trillion-dollar titans. Go find those bargains, they are out there. Oh, and before we go, here is my performance from 2024. Oh, it's 104%. Well, maybe there are actually some good smaller companies to invest. Who knows?